everybody. This is Bob Iacchino from Path Trading Partners. As always, Mike Arnold's with me. Quick Path chat, looking at the Euro US dollar. Dollar continues to strengthen, obviously. You can see it in the chart here. You see the Euro continuing to collapse. Goldman Sachs actually predicted parity by 2018. It may be sooner than that if Draghi doesn't do anything to sort of curb the fall of the Euro. I don't know that he will, because the Euro, especially with Brexit, is not necessarily, European Union is not necessarily pulling up in terms of GDP at the pace that the rest of the world may be. Sterling US dollar, Mike's going to comment on that. Nothing fundamentally new. Same thing in dollar yen, although we're seeing a move toward that pattern that Mike talked about. We're going to touch on crude oil as well. This is a crude oil chart based off of CFDs, but what Mike tells you on this chart will be applicable to futures as well. So whether you trade CFDs or futures on crude oil, what Mike says will apply. The prices are exactly the same. So I'm going to go ahead and turn it over to Mike, and then I'll have a final crude commentary afterwards.
Okay, thanks, Bob. So let's jump back to the Euro first. Euro, we could not get above this 107.58 level with any sustained move, and especially on a closing basis. You can see how it didn't close above that on a daily. Now it's pulled back to the rotation zone on the daily. If it continues lower, watch for it to target the 106.41 level. Okay, that's this magenta line, which is also the rising 21 EMA on a daily basis. So that's our next target for the downside if it continues lower. If we turn around either today or tomorrow, watch for it to test the 107.15 level, which is the next magenta line higher than finally these recent highs. Keep in mind, on a weekly basis, this is very important to look at multiple time frames. We rallied up. It could not get beyond this rotation zone on the weekly basis, so we're not surprised to see it lower. Now, if we do target this lower magenta line, we also have the rising 8, and there is a specific pattern where we could catch on that and potentially then turn higher, but we'll have to wait and see if that happens. On the pound, we went up above the trend lines, hit our first target, came within a couple pips of our second target. Now we've come back to test the first target level. Nothing new to do there. There's tons of resistance up here where it rallied to, so we're not surprised. We now have a rising rotation zone on the daily chart, so we could see this pull back even a little further and then catch on the rising rotation zone. So nothing's really changing there. If you're looking to the short side, keep in mind that you should not make targets really below the 124.90 level or lower, because you have a rising 8 EMA. We have that trend line coming in there, and it looks to be right now to be catching on this prior level. So nothing really changing there. Quick with the yen, still this potential double bottom still in play. Come up and testing the 21 area, which we talked about yesterday. So there's some resistance around today's highs. If we get through the resistance around today's highs, watch for a retest of these candle bodies. And then if we can get through there, a retest of the peak of this double bottom. Okay, so that's longer term. We're going to be watching for that. Finally, on oil, we have this trend line coming down about 53.95, 53.97, and we have a significant level right here, right around 53.97. If we get a close above, I'm calling it the $54 mark on a daily basis, watch for a potential retest. Well, this is called a defining point of our trend line, which is about 55.22 on that chart. On my futures chart is 55.24. So right around that 55.20 to 55.25 mark, watch for a retest of that. We still have potential shorts in place, but nothing that's close to being triggered yet. We do have a fair amount of overhead resistance. That's why we're going to be watching for a close on a daily basis above this $54 level. Back to you, Bob.
Thanks, Mike. Just real quick on the crude oil side of things. There's a conflict as to whether demand is rising or falling. We've seen both sides of that argument in the last few days. Certainly domestic demand in the U.S. is growing, but international demand seems to be either sideways to shrinking. One of the reasons is China looks like they're done building up whatever strategic reserve they were trying to build up. Having said that, we're still in that range, as Mike said, in terms of price. But right now, it looks like OPEC is complying, and the market is starting to get a little bit nervous about how much more shale is willing to do with prices only in the mid-50s. Now, the Permian makes money in the mid-50s. The Bakken makes money in the high 50s, and then the Eagle Ford and the rest. Really, it takes about $60 a barrel, $65 a barrel before they're going to start putting money into exploration of new wells. So keep that in mind. But again, we don't trade that stuff. That's just interesting background for why price is doing what it's doing. Watch those levels Mike talked about if you're going to be trading crude oil or any of the things we discussed. Cheers, everybody. Thanks for listening, and we'll talk to you in the next Path Chat.